Now, many of you know that all over the world right now, if there's one thing that is being discussed the most is, of course, tariffs. This week, we have been hearing tariffs, especially from the US imposing tariffs onto other countries like Canada, Mexico, and China. This is something that we have been hearing this week. Now, on this video today, I want to tell you how tariff can impact the stock market, or how tariffs can impact the stocks that we are owning, because tariff can significantly impact the stock market, influencing trade, corporate profits, and investor sentiment. And what I want to give you on this video is how it affects, or tariff will affect, the companies that you and me own in the stock market. Now, number one, the impact of tariffs on industries, companies we own listed in the stock market. Right now in Europe imposed 20% tariffs onto Chinese EV cars. So what that means is that China needs to adjust their prices of their EV cars onto Europe, because right now they need to factor in these 20% of tariffs, which makes their prices for their cars in Europe to go up, because for them to make a profit, they need to increase probably their price by that 20%, or to cover for that 20% to at least make profit selling their cars. This simply means that Chinese EV cars won't sell that much in Europe because their cars will be expensive. I mean, if you increase the price of the products by 20%, it means that those others, or your competitors, local competitors, they now have an advantage over you because their products are cheap, which in this case, the European consumers to go for the local brands or the other brands that are coming maybe from the US like Tesla, which they will be cheap. They get them at a cheaper rate, which that has an impact into the Chinese EV companies, right? So this is how tariffs impact some of the companies that we invest in the stock market. I mean, it can be EVs, it can be steel companies, it can be anything, but when they say they are increasing tariffs, it makes the products that we are taking into the US more expensive. It makes the US products to be more affordable, which therefore will make our products to be so difficult to sell in the US due to tariffs. Now, number two, market uncertainties. You will agree with me to say that obviously, if we are saying that the Chinese EVs that are going to Europe are getting tariffs of 20%, that brings uncertainties. Investors won't invest that much into the Chinese EVs because of these uncertainties, because they don't know how much will Chinese companies will still make in terms of profits based off the new tariffs. So it brings uncertainties, and investors ends up not wanting to put money into those companies. And again, I'm just making an example with EVs or with the situation of China and Europe, but it can be anything. It can be on certain products, it can be on anything, and therefore that will make the sentiment around people investing into countries like China, investing into countries like SA, if there are any tariffs imposed onto SA on certain products. Now, number three, economic growth and inflation. You will know that when their tariffs increased, let's say, especially, let's make an example with US and China. Both these countries make a lot of money from each other. And if US impose tariff on China, which is the case, and China impose tariffs onto US, you will agree with me that the business, the transactions won't be as much, because if US impose tariffs onto China, China won't sell that much of products in the US, and therefore the US might not make much money from China bringing their products there, because their products cannot be afforded by just anyone anymore, therefore reducing the economy growth of both countries, which is something that is not good. Now, inflation. Now, you will agree that if they say US has increased tariffs on some of the Chinese products, it means that those products which the US increased tariffs coming from China, the local producers, the people that are producing the same products in in the US are going to receive a lot and lots of demand, because right now people don't have options. They have to go buy the local produce products than going for the products that comes out of China, which this will bring a lot and lots of demand. And we all know that the more the demand, the more the prices of those products will go up. And when they go up, we know that triggers inflation. It is the reason why that, of course, this will slow down the growth of the economy, which will then spike inflation, which we all know the market condition of high inflation. Investors don't want to do anything with high inflation because they know that that environment is not a very good one to invest. So it ends up affecting or impacting the stocks that we own in that country. Now, number 4, impact on specific stocks and indexes. You will agree with me that there are companies that, of course, they make money or they generate money by transporting stuff from one country to the other. These are the companies that, of course, hurt the most when there are tariffs, because they are not taking as much. If the US impose tariff on some products in China, those products won't be in demand, and therefore there won't be any need for those companies that transport those goods to transport as much goods as possible. They won't be making as many trips as possible, therefore hurting profits of their companies, hurting the revenues of their companies, which is not good at all. Boeing, American Express, these companies will be impacted by this tariff increase because they are not working as much. They are not making as many trips because of this tariff increase between the two countries, because of this increase in tariffs, which of course makes China not to export that much of goods into the US, right? So it does have an impact also on specific stocks. Now, all these points that I told you can have a huge impact into the stocks, into the market, like how we discussed. Tariff can be can cause chaos or bring chaos in the markets in countries, which is something that is not good. Stock market can be impacted. The companies you own can be impacted due to tariffs. And I hope I was a bit clear. I hope I explained it better, and you now know how tariffs have an influence into the companies you own, into the stock market, which is for that reason we don't, of course, want countries to fight to impose tariffs on one another, because at the end of the day, if that does not get resolved as soon as possible, economies suffer, economies struggle, which leads into countries not doing that well, especially when you talk about USA and China. These are the two strongest economy in the world, with US of course being the leader or taking lead. But if they two fight, it usually also impacts or has an impact onto other countries. It rubs off other countries, which is something that is not good at all. So yeah, man, just thought I'd give you how tariff can affect the companies that you own in the stock market. I hope right now when we talk, or when you hear someone talking about tariffs, you will remember how these affect you as a retail investor investing into the stock market. Don't forget to like this video, man. It takes me some time to make these videos, and all I ask from you is that you hit that like button, you hit the subscribe button, because on this channel we are all about investing, man. We want to make money, we want to get rich, we want to reach financial freedom investing through the stock market. So if you have not subscribed, consider doing so, because there is more good news, there is more topics that we are going to cover this year on this channel. See you on my next video, and God bless you all.